Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, August 25th, 2020. We have several headlines that are going to move markets as we're seeing markets move. So let's get right to it. So new home sales right now rose 13.9% in the month of July versus the 1.4% expected. That was a huge upside surprise number. Wall Street didn't get it even remotely close. So that number is really showing that the consumer confidence is there. Think about this. For somebody to make that home purchase, that's a huge bet on the confidence of their economic stability, their job, and their employment situation on a go-forward basis. So this isn't insignificant. This is why markets and S&P are hitting all-time highs once again, because it's looking through what we see on the daily headlines on a daily news cycle. That actually translates into a 36.3% year-over-year increase in terms of volume of sales. And then the price jump is a 7.2% on an average in the median over the course of year over year right now on home sales. So residential real estate continues to be extremely hot, and the supply, it's a supply and demand factor. Supply is now reduced to 4.1 month supply in terms of sales that are available on market. Homes that are available on market versus the 4.7 months, which has been the historic average that we've seen as of recent. So we are seeing all-time affordability increased because of interest rates are all-time low. We're seeing the re-urbanization. People are moving out of cities and getting into the suburbs, if you will. That's accelerating this trend. And on my ride to work today, I literally counted 5 real estate signs of homes for sale. 4 of the 5 were in escrow. It's incredible. So we're seeing a lot of pickup demand, short supply, increased home prices, but this is tremendous for the U.S. economy because these numbers, keep in mind, we're in the third quarter right now as it relates to the GDP. Those numbers will be reported in October. And that's going to be contributing to a strong GDP as markets anticipate this. So that consumer confidence to buy that home, which is probably in most cases the largest single purchase that a person can make or a family could make, is betting on a home and a mortgage that size. And we're seeing this conviction right now amidst a global pandemic. So what does that tell you? The take-home point here is that there is life at the end of the tunnel in terms of the stability and the cornerstone of consumer confidence, and as evidence, empirical evidence on a daily basis right now in the U.S. economy by home sales. So it's another glimmer of shining light that's not going to be reported on our nightly news. In fact, this is, if you go to CNBC, it was the third scroll down, so third page down, probably the 14th business story. It definitely wasn't a front fold story. And I don't know why that wouldn't put that in the front headline. But again, CNBC, I love to pick on you, and you guys continue to take good economic news that markets are paying attention to and bury it in your website for someone to go find. But I found it for you. I'm reporting it to you now. Markets are paying attention. This will be huge as we get closer, as we're in the middle of the third quarter GDP. So it's a great number. Our second topic of the day is there's new thinking on COVID lockdowns. The International Monetary Fund has estimated over 400 million jobs worldwide have been lost because the globe shut down. And this article is actually thinking that the reaction to this by economies, by governments, by policymakers, with a blunt force in stopping everything all at once. Now there's new reports, according to this Wall Street Journal article, that was the wrong policy measure. We could have done it a little bit differently. There's other countries around the world that they referred to that did it differently and saved more lives and more economic without as much economic hardship that we've seen. So now we have the evidence around the world as we're gathering. This is 99.98% survival rate. And it grows every day. The survival rate grows every day because we have the medical community wrapping their arms around this with therapeutics as well as vaccines around the corner. And also there's ways of protecting ourselves. And so the market sees that we're going to reopen. We've got all the stimulus built in, not only here but around the world, as the International Monetary Fund described, and that a lockdown 2.0 is not going to happen. It literally is not going to happen. And so it's welcoming news because we can live with this virus, because the more importantly, that this won't be the only virus that the United States or the world has ever seen in terms of a pandemic. And ultimately, this got us prepared for one that will be, unfortunately, maybe in the future, a lot more deadly. So our U.S. medical system has used this opportunity to play catch up, but it'll show us in a sort of a go-forward basis, a playbook of what to do and how to operate and how to navigate through something that's as deadly as this and as tragic as this, but at the same time understand this a little bit better. Markets are understanding that, markets are seeing that on a go-forward basis, that we're going to do things a little bit differently on the next time around by getting our medical system up to speed, giving them the money that they need or allocating it so that we can be prepared next time. But more importantly, on a go-forward basis, as at least it relates to this day and age of the coronavirus, there's different thinking and better ways of doing it going forward. And that's what this Wall Street Journal article is basically articulating, and that's what markets are paying attention to. So in the next couple of days, we're going to have the Federal Reserve Chairman Jerome Powell back in focus as he's going to go to the Jackson Hole Symposium. And ultimately, it's a big gathering of all of the economists around the world. They usually go to Jackson Hole. I don't know if they're probably going to do it virtually this time. But essentially, it's a check-in on everyone's economy. And it's also a projection on sort of GDP, global GDP, on a go-forward basis. And so you get to hear from all the great minds in Jackson Hole, ultimately, because it's also great weather and a great location to be there as well. So Jerome Powell, it's customary for the Federal Reserve Chairman to give thoughts on the economy to date, as well as thoughts on the future of economic policy and sort of forecasting what their thoughts are on any given economic year. And this year it's going to be bigger than ever because markets are going to pay attention to every word that Jerome Powell has said, and basically talking about the inflation peg, the yield curve control, unemployment. The Federal Reserve has two mandates: one, full employment for the U.S. economy, and two, staying ahead of inflation. And right now, I don't think they're going to be above the 2% inflation target, or they're going to anchor yields and the yield curve essentially below the 2% inflation target. So ultimately, that translates into cheap money that's going to work its way into the U.S. equity markets on a go-forward basis. Markets are going to pay attention to. That's what he signals or what he says. And so all eyes and all ears will be open in terms of what Jerome Powell is going to say at the Jackson Hole Symposium. So that's what markets will be paying attention to on a go-forward basis. That's it today. Thanks for watching, and tune in next time. Hey, we're getting close to 1,000 subscribers on our YouTube channel. So if you're not subscribing, it's an easy to do. Just go to YouTube on Blanke Schein Wealth Management and subscribe. We appreciate that you do that. Like and subscribe, and tell your friends and family. And also on the calendar, September 16th. Is our election update. So we're going to have special guest Bob Stein from First Trust. He is a Washington insider, going to give us sort of election positioning for our portfolios, and that's September 16th. And again, if you can't make that, that's why you got to like and subscribe on our channel on YouTube so that you get that automatically as a replay. So thanks again for watching, and take care.